Welcome back to Investing Talk podcast. Today, we're tackling a question I know many of you are asking. Is RedCat Holdings a good time to buy now? We're going to thoroughly unpack all the recent developments, the good and the bad surrounding this drone technology company. We want to help you cut through the noise, basically, and get a clear picture from the latest sources. Before we jump into this analysis, if you find this discussion valuable, please take a moment to subscribe, like, and leave a comment. It really does help us reach more listeners like you. And hey, if there's a specific company you'd like us to look into in a future episode, just drop it in the comments below. You can also consider buying us a coffee to support our work. Every bit helps. For this particular discussion, we've gathered information from, various places, detailed articles from Timothy Sykes, comprehensive reports from investing.com, and a full stock analysis too. Our mission here is pretty straightforward. Guide you through the complexities in these sources and highlight what truly matters for your understanding. So if you've been watching RedCat Holdings, you've definitely seen, a stock that's been on a bit of a roller coaster lately. What exactly sent it plummeting by nearly 10% back on August 15th, 2025? What's behind this pretty dramatic shift in investor confidence?
Well, the immediate trigger, it really seems to be their Q2 fiscal 2025 revenue report. It came in surprisingly low, $3.2 million.
Wow, okay.
Yeah, and that's starkly lower than the predicted $7.7 million. We're talking, nearly a 60% deviation from what the market was expecting.
60%. That's huge.
It is. And this isn't just like a small miss. It suggests some fundamental issues, perhaps in how they forecast or manage costs, maybe struggle scaling production efficiently, or even supply chain management. That kind of shortfall, especially when you add in a heavily negative pre-tax profit margin and sizable current debt, well, it paints a concerning picture.
Right. Operational inefficiencies, maybe?
Possibly. A negative pre-tax margin means they're losing money before taxes, and that debt adds immediate financial pressure.
Okay, so beyond the raw numbers, what really grabbed my attention in the sources was the legal challenges facing RedCat. This isn't just about missed revenue, right?
Yeah.
It feels like it strikes at the core of their credibility.
Mm.
We're seeing accusations mainly about alleged deceit, how they portrayed their Salt Lake City facilities' production capabilities, even the validity of their U.S. Army contracts. These are serious allegations, and they've already led to numerous class action lawsuits alleging securities fraud.
Absolutely. And what's critical here is how these kinds of legal battles, they invariably create significant jitters among investors. You see it time and again.
Yeah, uncertainty.
Exactly. It often leads to pretty abrupt stock declines because, fundamentally, trust evaporates. Fear takes over. When a company's accused of misleading people about core capabilities or contracts, it casts a long shadow. And their financials, showing high operational expenses, the day-to-day running costs against lower gross earnings, that only deepens the concerns.
So the money coming in isn't covering the costs easily.
Right. While total assets are reported at $59.7 million, their expenses were over $14 million in corresponding periods. That raises significant questions about, long-term sustainability and just basic financial management.
So what has this mix, the poor earnings and these legal woes, actually meant for RedCat's stock chart patterns? What's the market telling us there?
Well, the stock's recent performance definitely shows those wild swings, reflecting all that uncertainty we talked about. We've seen a pretty steady decline since July 21st, 2025. And that period directly mirrors when the news about these legal disputes really started coming out.
Okay, so a clear correlation.
Very clear. It indicates a breakdown in investor confidence. This high volatility, fueled by both the disappointing earnings and the ongoing legal battles, it just creates this narrative of instability. For investors, it means the stock price isn't just moving on fundamentals right now. It's reacting really sharply to every piece of news. Makes it a very high-risk, unpredictable asset in the short term.
Okay. So the headwinds are undeniable. The lawsuits are certainly casting a long shadow, but our sources also reveal a different side to RedCat, one focused on strategic wins and future growth. So where can we find those, let's say, glimmers of optimism in this turbulent landscape?
Yeah, that's the crucial question, isn't it? And if we connect this to the bigger picture, RedCat did end Q2 2025 with a surprisingly strong financial position, at least from a liquidity standpoint. They reported $66.9 million in cash and accounts receivable, plus another $21 million in inventory. That cash reserve is pretty significant.
Okay, that's a cushion.
It is. And CEO Jeff Thompson, he stated that RedCat is, quote, at the forefront of a major transformation in unmanned systems. He highlighted several key developments. One big one is their AS9100 certification.
Ah, yes. Explain that a bit.
Sure. For listeners who aren't familiar, AS9100 is basically a gold standard for quality management systems in aerospace and defense. It's a huge stamp of approval.
So, essential for military contracts.
Absolutely essential. It signals they meet the incredibly strict requirements. He also pointed to strategic partnerships and their expansion into uncrewed surface vessels, USVs.
Autonomous boats, basically.
Exactly. Suggesting they're, quote, entering the second half of 2025 in a strong position. That's the leadership narrative anyway.
And their CFO, Chris Erickson, he echoed that optimism, didn't he? Emphasizing their balance sheet is in a fantastic position to execute our long-term goals. They even pointed to executing that contract with the U.S. Army in July 2025, delivering up to 690 SRR Black Widow systems. That sounds pretty crucial. Potentially a much-needed revenue stream. How significant is this Army contract, really, especially given those recent revenue shortfalls?
Oh, it's incredibly significant. It might be one of the strongest bullish signals they have right now. It's not just a small order. Delivering 690 systems, it's substantial. It gives them a real competitive edge for specialized government work.
Right.
And the CEO himself, he projects 2026 to be a breakthrough year for the company, largely driven by the expanded budget for this specific program.
So a lot is riding on this.
A lot. Their forward earnings growth heavily depends on fulfilling and maybe even expanding these critical military contracts. And that AS9100 certification we mentioned, it makes them a much more attractive, more trusted partner for exactly this kind of work.
Yeah.
It reinforces their credibility.
That analyst consensus, though, it's still quite surprising given everything we just discussed. A strong buy.
Yeah.
With 12-month price targets between $13 and $16, that suggests, what, a potential 44–77% upside from current levels? Are these analysts maybe being a bit overly optimistic, or is there something fundamental they're seeing that justifies this confidence?
It's a fair question. And the optimism seems to stem from a few key areas. Analysts are likely factoring in the immense potential for this government contract growth and assuming the company can execute on those contracts effectively.
The potential, okay.
Right. That's a huge positive for future revenue and, of course, credibility if they pull it off.
Yeah.
And from a technical perspective, there are actually some bullish signs on the charts, too.
Like what?
Well, the stock price is currently trading above both its 50-day and 200-day simple moving averages. That suggests positive momentum, both short-term and longer-term. Basically, trending up. And the 14-day relative strength index, the RSI, is at 64.00.
Yeah.
That indicates healthy buying interest, but without pushing the stock into overbought territory, which could signal, pullback might be coming.
Got it. And future catalysts.
Well, beyond just fulfilling the current Army contract, obviously future earnings reports are key, especially given the CEO's big 2026 projection. And you can't rule out potential M&A activity. Mergers and acquisitions in the drone and defense sectors are happening pretty rapidly as things consolidate.
Right, okay. So we have this company with, well, undeniably significant challenges, serious legal battles, but also clear strategic potential and this unexpected level of analyst confidence. It's definitely a complex picture. What are the absolute key risk factors an investor needs to consider before getting involved with RedCat Holdings?
Yeah, this is where we need to be really clear. RedCat Holdings is fundamentally considered a speculative play.
High risk, high reward potential.
Exactly. While there's that potential upside, it carries elevated risk. For one, their ongoing operating losses. They're burning cash.
Which puts pressure
on their balance sheet, maintaining liquidity. Then there's the significant dependence on government contracts for growth. That exposes them to political risk, budget cuts, the whole competitive defense procurement game.
Sure.
Any setbacks in executing those contracts or just shifts in government spending priorities could materially impact their financials. Big time. Plus, the drone sector itself. Rapid technological change, intense competition. What's cutting edge today might be old news tomorrow.
True. New players emerging all the time.
Constantly.
And beyond those company-specific issues, what about broader market or sector risks? Things outside RedCat's direct control.
Well, the defense and drone sectors, they're inherently subject to broader political risks, big regulatory shifts, and global supply chain vulnerabilities. We've seen that impact lots of sectors.
Geopolitics.
Yeah, geopolitical events can suddenly change demand or create unforeseen problems. And remember, as a small cap, high-growth tech stock, its price is just inherently subject to large swings based on news and market sentiment.
Amplified volatility.
Very much so. While one source gave an overall rating around 7.5 out of 10, suggesting it's currently okay capitalized for near-term operations, it's crucial to understand it still needs consistent profitability to be suitable for more conservative investors. This is definitely not a set-it-and-forget-it kind of stock for most people.
And it's so vital for you, the listener, to remember this. Any investment carries inherent risks. That includes the very real possibility of losing your investment. Past performance absolutely does not indicate future results, and results are definitely not typical. Making money trading stocks takes time, dedication, hard work. That's especially true for speculative plays like this one.
That's absolutely right. And research backs this up. Studies on active trading, day trading, consistently show the vast majority lose money.
Right, those stats are sobering.
They really are.
Yeah.
Like 97% of day traders in one Taiwan study, 97% of Brazilian futures traders with lots of activity, they could expect to lose money. So while sure, maybe short-term trading opportunities exist around news and earnings for very aggressive, experienced investors, RedCat Holdings is fundamentally better suited for a long-term investment only if you fully accept this high-risk profile. And you have to genuinely believe in that defense sector growth story and the company's ability to execute on those critical military contracts. It's not a casual decision.
RedCat Holdings certainly presents a truly complex, fascinating picture. On one hand, you have these undeniable struggles, significant revenue shortfalls, looming lawsuits that really question the integrity of past statements. But then on the other hand, you see strong cash reserves, these potentially pivotal military contracts, key industry certifications, and this strikingly optimistic outlook from both leadership and, well, some analysts. So given this tension, this pull between current financial turbulence and these strong future-oriented developments, how do you weigh the immediate concerns against the potential for significant long-term growth in this dynamic drone and defense market? What key piece of information, or maybe what specific action, would you need to see from RedCat Holdings to feel confident in their trajectory moving forward? Something to think about.